Hello and welcome back to the channel. In this edition, we'll be reviewing two companies which I have a personal holding in. One of them is Hindustan Aeronautics, and the other one is Indian Hotel Company Limited. So both of them are into different industries, but I really wanted to bring them forward for the prime reason that both of them announced their Q2 2025 results and wanted to have a brief overview about what the quarterly results were, how does it look in a trailing 12-month basis, and what are some of the important points that were discussed in the con call. So here, the first company that we'll go at is Hindustan Aeronautics with a market cap of 2,71,000 crore. The stock P has come down a little bit to 32. We'll quickly look at, I think, how the P has done, right? So here we are looking at a P basis. So the earning per share has expanded. These blue bars are earning per share, and as you can see that the earning per share has consistently increased. So at December of 2021, we had an EPS of 52.63, and now when we are standing and looking at the results, the EPS has expanded to 122.86. So earning per share is nothing but the net profit distributable after tax divided by the total number of shares. And what we are looking at is we are looking at a constant expansion of earning per share, because of which the price to earnings also is on the downward trajectory and currently sitting at 32, which is a very attractive proposition to hold a share for the long run. Although this is not a stock recommendation, and I would urge you to do your own research before investing. I got in at a very different point in time, and I got in with a different mindset and at a different valuation. So I would urge you to, if you want to invest, then look at the valuations and then proceed accordingly. When we look at the quarterly results, so here we see that there has been an expansion in operating profit margin as well. But if you look at this, it's quite cyclical in nature in terms of how they book their revenue. So in June of 2023, they had booked close to 4,000 crore worth of revenue. Um, Whereas in June of 2024, it has increased to 4,348. And if you go from June right up to March, you will see that there is a upward trajectory. So here you will see 4,000 crore worth of revenue booked in June of 2023. In September of 2023, this has increased to 5,600, then 6,000, and then 14,769. Um, Coming down to FY of 25, we see that they had booked 4,348 in comparison to 3,915 crore. And as of September 2044, this is sitting at 5,977 compared to um, 5,636. So, so the earning per share currently is sitting at 22.28 for this quarter. And the profitability also has increased marginally from 1436 to 1490 if you compare it to the last quarter. And if you compare year on year, it has increased from 1235 to 1490 crore. So all the talks about the delay in engine, the delay in engine is one of the prime reasons a lot of investors have a cause of concern on this stock, because we do not have our own indigenous engine to fit into the LCA Tejas. We have Kaveri engine, which India has been developing, but we are dependent on the GE 404 engine coming from General Electronics in the US, and that has been a prime cause of concern, because of which there has been some price pressure. But in terms of revenue and in terms of what the growth trajectory has been, um, it it the pressure is not showing, and deliveries have been delayed, but the revenue has been on the uptrend. So uh, if we compare this to the trailing 12 month, again we see that in terms of the earning per share, it is sitting at 126.67. Operating profit margin, it has maintained a healthy operating profit margin. When I did get into the share initially, it was sitting at in March of 2021, it was sitting at an operating profit margin of close to 23%. And from there, it has constantly expanded. One of the prime reasons for this expansion is also the repair and overhaul, which is kind of like an annuity product for the company. So every jet or every helicopter that the company does sell, it has to give overhaul and repair facilities for that. And as and when you keep churning out more and more aircrafts to the Indian Army or the Indian Navy or the Indian Air Force, that you also need to service them, and that then sits within your revenue as kind of like an annuity product, which is high margin as well. So what we are really seeing is that the OPM percentage was sitting at 23%, but it has expanded to 32% because within these numbers, the percentage of repair and overhaul is going on increasing. And because of that, the operating profit margin has also expanded from 23% to 32%. Here as well, I think the net profit as well. So we are looking at a net profit of close to 3,239, and currently it's sitting at 8,500. So a huge up move in the net profits as well. And if you look at how the stock price is done, so over the last year, 1 year, it has had a CAGR of 92%. Over the last 3 years, it has done phenomenally well, and it has had a CAGR of close to 81%. And what has happened now is it also has received additional orders worth 26,000 crore for the refurbishment of Sukhoi. So that takes the order book to 92 to 94,000. And because of fresh orders, it should also move up to 1.2 lakh crore. I think we'll look at it more in detail in the con call notes. So yeah, so in the last 5 years, this has done a 60% CAGR. So it's done phenomenally well. So if you look at the price as well, so for the last 5 years, for example, if we just look at the price, so we were sitting at pre-COVID at a price of 387, so close to 400. So from there, it has 10x. It is sitting above 4,000. And this does not account for dividends that the company pays out. And if we account for dividend, then the returns would be much higher. But yeah, so a lot of good interest on this share. I think both internationally as well as domestically, there has been some pricing pressure. If you see here, it had touched a price of close to 5,264 crore. And right now is down to 4,057 crore. So the earning per share expansion is both a combination of the drop in prices and also the increase in profitability. So both the numerator and the denominator has worked favorably to reducing the price to earnings as well, in the sense that price is reduced, but the earnings is also expanded. So because of that, the price to earning multiple has been constantly going down. And if you look at the PE ratio here, it had reached a high of close to 48, but because of the cocktail effect that I mentioned about the price and the earnings both moving in the favorable direction for the stock, the price to earnings has come down to 32.3. So we looked at the quarterly results. We looked at the annual results as well. Net profit of close to 8,472 crore with earning per share of 126.62. It has consistently been paying out dividend. So the dividend payout percentage has been in the range of 30 plus. If you look at all the years and barring, I think March of 2022, it has been paying out a dividend payout ratio of close to 31%. The return on equity as well, if you see, it's constantly on the uptrend, um, and the company has been generating great returns, and that is pretty much visible in the price of how the price has moved. It's not a lot of times there is a case where the profits are constantly moving up, but the price does not move in the same direction. But that is not so the case with HAL, because in the last 5 years it has done a 26% CAGR worth of profit growth, 33% in the last 3 years, and 40% in the trailing 12 month. And the price is responding to the profit increases. Um, but let's see how long the stock goes from here. So if you quickly look at the notes, so in terms of the con call notes for we should be having, yeah, yeah. So here what they mentioned is this con call notes are from May 2024. And what we see that revenue from operation almost stood at 3381 crore as compared to, so there has been a growth of 13%. So this is the Q1 numbers that there are in the con call notes. So they haven't updated the Q2 ones, but I'll just go through quickly ones in for the interest of where they were in Q1 as well. Manpower cost has been rationalized from around 23% of revenue to almost 17% last financial year. Overall expenditure has been significantly reduced from 8% to 4.66%. In terms of future growth and expansion, there's been a lot of activity going on within HAL because a lot of orders are being received. And so, as you can see, they are expecting a robust capex plan for the next 5 years with an estimated expenditure of close to 14 to 15,000 crore. They also have a history of spending close to 10% of their revenue on R&D expenses, R&D investments, and that is what makes the company really stand out because they are not only sitting on the laurels, but they're also spending on R&D to constantly go on and improve their products. In spite of the fact that the only um, demand that they generate is from the government of India to by supplying to the Navy and to Army and to the Marine and to the Air Force as well. So as you can see, HAL also has within Tumkur, which is a few kilometers away from Bangalore, one of the largest helicopter factories in Asia. It is estimated that for the next 20 years, it'll go on producing helicopters worth 4 lakh crore. So currently, the market cap of the company itself is not even 4 lakh crore. In terms of the order book and outlook, order book as of the current date stands at 94,000 crore with expectation to increase to 120,000 crore. So this is as at Q1, and it has already increased to 120,000 crore, is what I believe. But do let me know in the comments if it has or HL is still expecting some future orders because of which it is still sitting at in the range of 94,000 crore. There are anticipated contracts for LCA Mark 1A light combat helicopters, which is what the Tumkur facility will be facilitating. And what they have mentioned here is that there is an additional facility that they would be opening in Tumakuru and a third line of LCA in Nasik. So constantly expanding their production line. They're also tying up with the private sector in a big way. They also tied up with Airbus from Spain for the production of the freight line of aircrafts. Yeah. So these are some of the anticipated contracts: light combat helicopter, advanced light helicopter, Dornier aircrafts, and utility helicopter marine. Expecting orders totaling around 1,60,000 to 1,70,000 crore in the next 18 months to 3 years. So that's a huge push that this stock will receive in terms of the order book. The real challenge now that will start is the challenge of meeting expectation, meeting that order book, and churning out the aircrafts on time because um, what the Indian Air Force is experiencing is Air Force has a lot of Russian MiGs within their arsenal, and those are required to be phased out slowly. You would constantly hear when you would read the news that uh, one plane here or there within the Indian Air Force has crashed, whether in Rajasthan or in different parts of India. So the phasing out of the aircraft really becomes important, and that's where HAL does come in. With the kind of neighbor that we have, both on our eastern and our western front, both China and Pakistan, um, the constant evolution of the Air Force becomes of prime importance, and that explains the procurement of Rafales from France. What China has done is China has also introduced the sixth generation uh, aircraft. Not too sure what the sixth generation, how is it better from the fifth generation? But the fifth generation essentially means that it is a stealth aircraft, and stealth means that the way it's painted and the amount of noise signature that the aircraft has, it would be as small as a golf ball on the radar screen. Very few countries have the capability of producing stealth aircrafts, and we are currently working with 4.5 generation, which is the Rafale that we have. But yeah, if we have to compete and if we have to be a superpower, or even a significant power to be reckoned with, then the production of these kind of advanced aircrafts becomes of prime importance. But right now, we are even struggling with the engines that we have. We are procuring it from the US, and these things would hurt India in terms of the supply chain being dependent on another country. And these things need to be sorted out in terms of being fully independent in terms of how we plan our manufacturing of aircrafts. In terms of export opportunities, export forms close to 1 to 2% of the order book currently. There are not too many exports that are happening, but yes, we are engaging with a lot of other countries. So here you can see that Philippines, Argentina, Nigeria, and Egypt are the countries where we can receive potential orders. A lot of these orders we come very close to it, and it gets flipped in other direction because a lot of these orders also are dependent on um, wa- uh, bribes and those kind of things. So not too sure as to how HL would proceed with that. And I would reckon that it would proceed with ethics, knowing the management. But obviously, this is what I think, and it can vary from my thoughts as well. But a lot of orders we have come very close to it and almost flipped. We have also set up our office in Malaysia in terms of HAL office, and we should be seeing some breakthrough in terms of order book recently because LCA Tejas has also generated a lot of interest. Also, we need to understand that not all the fighter aircrafts in your arsenal needs to be top notch. Some of them can be good enough for them to be inducted as a training aircraft, and also second line of defense or third line of defense in terms of arsenal that a country has. Also, within the con call notes, they have also guided that they are expecting at least one breakthrough order in the current financial year. In terms of technology transfer and indigenous development, they had signed an MOU with GE for the transfer technology for GE 414 engine, aiming for 80% indigenization. So this is a very important technology transfer that they have signed, and it'll be interesting to see if GE does give a lot of technology transfer because I feel that 80% they would try and safeguard 20% of the most critical information so that HAL cannot go ahead and start working independently on its own because that would hamper their own business. Working on integrating indigenous systems like Uttam radar onto LCA Mark 1A to increase indigenous content. So there's a constant drive for indigenization, and these efforts do keep coming in terms of different parts of the aircrafts are constantly being trying to be indigenized. So that's what they have mentioned as well. So the projected indigenous content is expected to be in the range of 65% and above for LCA Mark 1A fighter jet. In terms of the margin guidance, EBITDA margin guidance of 26 to 27% for the current financial year. Um, no major provisions have been made or reversals expected to impact EBITDA margin. In terms of manufacturing growth and execution, expecting manufacturing growth of around 15 to 18% annually. Repair and overhaul growth expected to be around 9% to 10%. This is the one point I was alluding to, that this sits as an annuity product within the revenues of HAL, and this would continue to do so. All the manufacturing that is done and then supplied to the um, different parts. So even if it's exported, if it is supplied, so HAL did supply Dornier aircrafts to Guyana. So Guyana, there's a high probability that Guyana would take repair and overhaul services of HAL. So these are some of the kind of things that I was talking about. That repair and overhaul would continue to create a dominant part of the overall revenue in years to come. Order intake guidance of close to 470,000 crore for FY25 does not include maintenance, repair, and overhaul orders. Yeah. Entered into working arrangement with Airbus of Spain for MRO business, expecting development in the coming years. So now what we'll do is we'll quickly move on to Indian hotels as well and see what is happening with Indian hotels. So Indian hotels, currently it's a market cap of 1,07,327 crore. And um, recently I read in the news that Adani has announced one more convention center in Vile Parle in Mumbai with a capacity of close to 20,000, close to 16 to 20,000 people, which is in line with what Geo Convention Center can hold. So Geo Convention Center simultaneously, if it utilizes its entire facility, it can hold close to 16 to 20,000 people. And Adani has come up with its own convention center. Now, what that will do is it'll any event that does happen within Mumbai or within those convention center, all the hotels in and around those areas are fully occupied, and then the companies do think of creating a case where they think of even within the same city creating more and more hotels. So, for example, I think Taj Hotels has recently opened up a Santa Cruz property within Santa Cruz, which is a 320 room property in under its Ginger umbrella, and also a few more properties in and around Mumbai. And those and they also have plans of even expanding across. So the two three cities, I think Mumbai, Delhi, Calcutta. So these are the prime workhorses for the hotel industry. And what is really happening is Yasho Bhumi or the convention centers within Bharat Mandapam within Delhi as well. These continue to push the occupancy rates. Average revenue per room has also been constantly increasing, and this is reflected in the price that we see here. So if we see in December of 2021, it was sitting at a price of 200, and from there on, it's sitting at almost a, if it goes up to 800, almost a 4x jump from December 2021. In terms of, if you look at the price to earnings with different hotels, we see that it's sitting at a price to earnings of 74.97. But from here on, really, the growth will continue to matter. And what the management has guided is a high growth. So it'll be interesting to see how this speed and response to the growth. But yeah, these valuations already look rich for now to make a fresh entry. And but yeah, it would be better if you consult your financial expert or do your own analysis to try and decipher what the value of the stock is. Sometimes the price to earnings remains at an elevated levels of 70s. We have seen Asian Paints for decades. It has remained in 70s and continue to churn out the return that it has. Um, but yeah, so that is something for you to analyze, research, and or consult your financial advisor. So here we see that in September of 2024, there was an expansion of close to 18% in terms of the revenue. The revenue grew from 1550 crore to 1826 crore. And here, if you see the OPM percentage, let's try and also decipher the cyclicality. If you look at June 2023, 1466, December, which is a Q3, is the best quarter for the hotel industry. A lot of NRIs flying in and willing to spend a lot of money, and also a lot of weddings that do happen, a lot of events that do happen. Wedding is a big push to this revenue recognition. Also, the holiday season and a lot of Diwali and these things, and also a lot of people coming in from abroad willing to spend money on premium hotels. So these then push up the Q3 numbers by quite a lot. So what we are seeing it within September 2024, within the Q2, we are seeing numbers similar to what we had seen in Q3 of 2023, which was the quarter last year, which was the third quarter last year. So we are seeing elevated levels of revenue recognition and revenue growth, 18% growth here. And even the net profit has jumped from 260 to 583 crore. So there has been a more than double the jump of net profit. Um, and these are very elevated. So it had a profit of in the last year, that is Q3 of Q2 of FY24 of 179 crore, almost 180 crore, and that has more than tripled. So You look at the earning per share, it was sitting at 1.18. Now it is sitting at close to 3.9. If you look at the trailing 12 month, here as well, we are seeing, so this is the 8% jump from 6769 to 7246. So not a biggest jump as the quarterly numbers, but yeah, I think we should also wait for the Q3s, which is the biggest, because this will be biased because this already has the Q3 numbers of the last year, but this does not have the Q3 numbers of the current year, so this will be suppressed. Um, the net profit is sitting at 1758, so an EPS of 11.76 compared to 8.85 in FY of 2024. So we look at how the stock price has done and how the profits has done as well. Sales, you can see that it has compounded at 63%. So great business for the hotel industry. There has been a big push to road infrastructure as well. I was in Goa recently and I did realize that a lot of people are driving down from Hyderabad. Earlier, driving down from Hyderabad to Goa was unheard of, but it has opened up new avenues. People are driving in for the weekend. People are driving in for 2, 3 days even, going to the casinos and um, heading back to the hometowns with their kids and families. So new avenues have opened, and earlier, if you had to travel from the south of Bombay to Pune, it would take significant time. But now, due to infrastructure projects that have happened, like the Atal Setu and those kind of things, you can reach Pune much faster from the south of Bombay. So people are getting faster to where they want to be, and hence they have more leisure time and they can plan getaways or hotel stays easily because of the saving of time that is being experienced because of improved infrastructure. In terms of the profit growth, in the last 3 years, it has given a 50% CAGR growth in profits. That is exceptional results. And even at the stock price has grown by 55% CAGR in the last 3 years. Within the last 1 year itself, it has grown by a 81% CAGR. And even when we see the return on equity, historically, it has been at the lower end, and now it is sitting at 14%. So when we look at the operating profit margin, you would see that the operating profit margin has turned around quite a bit. So 13%, 31%, 32%. And this should continue to expand because the hotel, what it is doing, it believes in the blended mix of having management contracts and owning the properties that it owns. Management contract allows it to have a leaner balance sheet without a lot of capital expenditure. But yeah, also you need to own the property to really make significant money, because in that case, 100% of the revenue will come to you. Management contract is certain percentage will sit as a revenue. But yeah, this will then reduce expenses and increase sales because the maintenance. So that will depend on the type of management contract that there is. There are 2, 3 different types of management contract. Few where the brand name is used, few where Taj in itself is um, involved in running the show and running the expenses, and it gives out a percentage of fees to the property owner. So there are different kinds of uh, agreements that it signs with property owners. Also, Taj Sats, which is the catering business of Taj, commands 60% market share. Is when I last checked. Do let me know in the comment section how much market share that does Taj Sats own now. So I think I'll end my video here. Do let me know in the comment section what you thought about the analysis, any other companies that you want me to look at, or any of the recent results that you want me to analyze. Thank you and have a great day ahead.